Good morning. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. And for this edition of Trade Talks, we have Fan Fave Phil Davis of Phil Stock World. Phil, as always, thank you for joining me. And for this week, I want to focus on is economic data reflective of reality. And this is perfect timing as GDP came in this morning at 3.0%.
Yeah. Yes, I said to my people, at 3.0%, I said, what are we, China now? Because, they come in at like 7.0%. You're like, really, 7.0? It wasn't 7.1 or 6.9. And now suddenly we're hitting our GDP on the nose. Obviously it could happen, but it's just interesting. And it's not so much that you can't trust the data, but you can't trust the calculations of the data. Like, for instance, inflation data, when they talk about the CPI, if you get the new iPhone, it's $999, right, for the new iPhone, but the processor is 40% faster. So you're paying 10% more for a 40% faster processor, and they count that as being 30% cheaper. Because it's not about the price of the phone. They're saying how much is the price of the computing power you're buying in your phone. And figures like that distort the data that we see, and they make little changes, very quietly make little changes to what do we count as an unemployed person, what do we count as a part-time worker, what do we count as somebody who's, what do we count as a monthly wage, do we include this as a benefit, if you're getting if you're getting your Social Security, is it a benefit? Is it a partial thing? If the taxes go down, is that a benefit to the workers? Looking in the future, they take the tax strategy that they plan to implement and call that some great benefit that's going to increase wages for projecting the future. Could be completely untrue, but that's what they use. So you always have to take these figures with a grain of salt and think about how they're made.
Right, and you also have to look into the reports a little bit more granular as well. It's almost like when we get the headline numbers for the employment report, the biggest thing I like to look at is wage growth, and we haven't seen that.
There you go.
So, and that's the biggest issue that I have. Okay, great, well, you have these $1,000 iPhones. You don't really hear about people getting raises, and we're not seeing it in wage growth. We're not seeing it translated to consumer spending, and that seems to be more reflective of what's actually going on.
Yeah. Now, interestingly, the big surprise in the GDP report this morning was there was a tick up in consumer spending, but it's very now. Here's the thing about consumer spending, though. If Donald Trump buys a solid gold toilet for $50,000, that counts as $50,000 worth of spending, even though it's insane. Whatever a solid gold toilet costs, so $50,000 be cheap. But you get the point. It's when these guys buy a yacht for for $500 million for a yacht, and you're like, well, that's like a huge chunk of the economy all of a sudden, and that counts as consumer spending. But the psychotic spending of wealthy people who are making a fortune on the stock market is not real growth. And when you talk to the average consumers, and when you look at the disposable income of the bottom 80% of the people, and when you talk about bottom 80%, that's everybody. That's America. Those are the real people, and those people are like this with their disposable income. And that's because, as you say, the wage growth doesn't even keep up with inflation.
Well, it's really interesting. A number of retail reports that I've read as well, they're not spending in consumer discretionary as they used to. It's no longer clothes and cars and that sort of thing. They're spending money on experiences, like travel and so forth. That's particularly millennials. That's what they care about more, is the experience versus clothes and pocketbooks and shoes and so forth. I've read a number of reports like that, and I think that's interesting to note as well,
right.
Particularly as retail has been such a big conversation with the Amazon effect and shifting consumer spend trends and so forth.
Right, but again, the travel stuff, it's the same thing. The airlines are making more room for first class, more room for people who spend $3,000 for a seat, less room for people who spend $300 for a seat. It's the same concept, that consumer spending is the spending of the ultra-rich who are becoming much, much wealthier than everybody else, and they can afford to do these lavish things, including $100,000 vacations.
Right.
Things like that are crazy.
I also wanted to ask you about this, and I realize right now with Hurricane Harvey, we're into the rescue and recovery phase, but since we talk about commodities with every conversation, I want to ask you, what do you think the impact is going to be on the oil and nat gas complexes, because it will be reflective at some point?
Well, it's going to be reflective right away. I mean, we just saw today, in fact, 5 minutes ago, had the inventory report, which showed a 5 million barrel draw in oil.
Right.
But that cut off on Saturday night. So now it's going to be really weird, because now the oil is going to get backed up. They can't ship the oil out anymore. So you're going to have a lot of oil getting backed up at the production areas. They can't even ship it to the warehouses or anything like that, the storage facilities. They certainly can't get it onto boats around the Houston shipping channel, which is where most of the oil
No, I mean,
goes
the
out.
refineries are shut down.
Yeah, and the refineries are shut
Right.
down and they can't process the oil. So you're going to have a huge build in oil inventories next week, the week after that, probably the week after that. We're going to start seeing tremendous builds. And that's why oil can't get above, like right now it's 47, I believe it is. Might be 46 actually. It just can't get going. And it's stuck down at a very low number. And even though we're coming into a holiday weekend, gasoline is through the roof because the refineries are shut down. And it'll, rebalance at some point. And we're long on oil at the moment, actually, because of that. But we were long on gasoline. We're cashing in our gasoline. Now we're going to go long on oil. It's going to even out a bit, but it'll take some time because this hurricane is going to be months in unwinding all the damage and getting things online. Right now, I mean, it's funny because the market reacts to news of this and that refinery and things that are shutting down. Everybody's doing the math on how many barrels of oil does this affect, how many barrels of gasoline does that affect. But the reality is they can't do a proper assessment. They can't even get to the refineries. They're underwater. So these are guesses. Everything is guesswork right now. And there's a lot of speculation. And we think oil got pushed a bit too low at the moment.
Now, do you think, taking that conversation and what we said about GDP before, do you think the impact of what happened in Texas is going to be reflective in GDP at some point?
Yeah. If you look at the storm, it's probably $40 billion in damages from the storm. Now, what that means is somewhere or other, $40 billion will be spent. This is a real test of the Keynesian theory that even a broken window is good for the economy. So we have many broken windows in Texas. But $40 billion will be spent fixing something that wasn't going to be fixed otherwise and wasn't going to be spent otherwise. And because of that, you're talking about 0.25% of the GDP boost, which is significant. You're talking about going from 3% to 3.025%. I'm sorry, to 3.25%. Right. So that's actually quite a large amount of a GDP growth.
Right, because this will, in fact, create a ton of jobs. You have to think of it
it'll
from that
stop people from working at first.
Right.
Because they can't get to work
Right.
and the company can't be open and so on and so forth. But then in the rebuilding phase, you're going to pretty much double the Houston number of jobs, which is adding 1 million plus jobs in the area.
Right.
So that's going to have a huge impact. And Trump's going to say how brilliant he was for causing the hurricane to bring all this into the economy.
If we have to take a positive out of it, that will certainly be one of it. Well, thank you, Phil, as always, for joining me at MarketSite. And traders, as always, thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.